In this video, we're breaking down two growth stocks Wall Street is quietly pushing to the sidelines right now, even as their underlying businesses continue to scale, expand, and compound at a pace most investors are completely underestimating. You're going to see how these companies are building long-term dominance, why their growth engines are stronger than they appear on the surface, and why the market's hesitation could actually be the biggest opportunity. Both of these businesses operate in massive, evolving industries where consumer behavior is shifting in real time. They are not just participating in that shift, they are helping define it. And when a company becomes embedded in how people live, spend, and consume daily, that is where real long-term value is created. Let's start with the first stock. Luckin Coffee, ticker symbol LKNCY. To understand why this business is so compelling, you have to zoom out and look at the bigger picture first. Luckin Coffee is not just competing in the coffee industry, it is riding one of the most powerful consumption shifts happening in the world right now. China's coffee market is still in its early innings. On a per capita basis, coffee consumption in China is significantly lower than in the United States or Europe. But that gap is closing rapidly as younger consumers adopt coffee as part of their everyday routine. Urbanization, rising disposable income, and changing lifestyles are all pushing this trend forward. This is not a short-term spike. This is a multi-decade shift. And Luckin Coffee has positioned itself directly at the center of it. Now here is where things start to separate Luckin from traditional coffee companies. Most global coffee chains were built on a legacy retail model. Large stores, premium locations, heavy staffing, and an experience-focused environment. Luckin took a completely different approach. They built a digital-first, efficiency-driven system from the ground up. Customers order through the app. Payments are processed digitally. Orders are prepared quickly. Pickup is streamlined. The entire experience is optimized for speed and convenience. This might sound simple, but the implications are massive. By removing friction from the purchasing process, Luckin increases order frequency. By reducing reliance on large physical spaces, they lower operating costs. And by integrating data into every transaction, they gain real-time insight into consumer behavior. This is not just a coffee company, it is a data-driven consumer platform. Now let's talk about scale, because this is where the story becomes even more powerful. Luckin Coffee has expanded its store network at an aggressive pace, reaching thousands of locations across China. This rapid expansion is not random, it is strategic. They are building density, and density creates convenience. The more locations they have, the easier it is for customers to access their product. The easier it is, the more frequently customers buy, and that increased frequency drives higher revenue per user over time. This creates a reinforcing loop. More stores lead to more customers lead to more data leads to better decisions lead to stronger performance. This is how scalable consumer ecosystems are built. Now let's move into the financials, because the numbers validate what is happening operationally. Luckin Coffee has been delivering exceptional revenue growth. The company has generated billions in annual revenue, with growth rates that significantly outpace traditional retail peers. This level of expansion indicates that demand is not just present, it is accelerating. But revenue growth alone is not enough. What matters is how efficiently that revenue is generated. And this is where Luckin stands out again. Their store-level economics have been improving as they scale. Because their model is built around smaller footprints and high-volume transactions, they can achieve strong unit economics. As more stores mature and customer traffic increases, profitability improves. This is the concept of operating leverage. Fixed costs remain relatively stable while revenue continues to grow, leading to expanding margins over time. For long-term investors, this is one of the most important dynamics to watch, because when a company reaches a certain scale and continues to grow efficiently, earnings can increase much faster than revenue, and that is where significant shareholder value is created. Another critical piece of Luckin's strategy is product innovation. They are not relying on a static menu. Instead, they continuously introduce new drinks, seasonal offerings, and localized flavors that appeal specifically to Chinese consumers. This keeps the brand relevant, drives repeat purchases, and increases customer engagement. It also gives them pricing flexibility. When customers are excited about new products, they are less sensitive to price changes. This allows the company to maintain or even expand margins without losing demand. Now layer that with their digital ecosystem. Because all transactions happen through their platform, Luckin has access to detailed customer data. They can analyze purchasing patterns, test new products quickly, and adjust their strategy in real time. This level of responsiveness gives them a significant competitive advantage. Traditional competitors simply cannot move as fast. Now here is where the investment thesis becomes particularly interesting. Despite all of this growth, scale, and operational strength, the stock is still not fully embraced by the market. There are several reasons for this. Some investors remain cautious due to past corporate issues, others are hesitant about broader concerns related to Chinese equities, and some simply do not fully understand the business model. But while the market debates these concerns, the company continues to execute. Stores are opening, revenue is growing, margins are improving, customer adoption is increasing. This creates a disconnect between perception and reality, and that disconnect is where opportunity exists. Because markets are not always perfectly efficient in the short term, they can misprice businesses when uncertainty or skepticism is present. But over the long term, fundamentals tend to win. If Luckin continues on its current trajectory, expanding its footprint, increasing customer engagement, and improving profitability, the underlying value of the business will continue to grow. And eventually, the market adjusts. That adjustment can happen slowly or it can happen suddenly. But when it does, it often leads to significant upside. Now it is important to acknowledge the risks. Competition in the beverage space is real. Consumer preferences can evolve. Regulatory environments can change. But the key question is whether the company has the structure, strategy, and execution capability to navigate those risks. And based on what we are seeing, Luckin Coffee is doing exactly that. They are not just growing. They are building a system that becomes more efficient, more valuable, and more difficult to compete with over time. This is what long-term compounders look like in their earlier stages. They are often misunderstood, they are often underestimated, and they are often overlooked until the growth becomes impossible to ignore. Right now, Luckin Coffee sits in that window, not fully recognized, not fully priced, but steadily executing. And for investors who are willing to look beyond the surface, that is where the real opportunity begins. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move on to the second stock, Mama's Creations, ticker symbol MAMA. This is where things get interesting because unlike Luckin Coffee, this is not a company that immediately grabs attention. It does not operate in a flashy sector. It is not constantly in the headlines. And that is exactly why most investors are missing it. But beneath that quiet surface is a business that is executing with precision in a category that is growing faster than most people realize. To understand why Mama's Creations matters, you have to start with the shift in consumer behavior. People are busier than ever. Work schedules are more demanding. Commutes are longer. Time has become one of the most valuable resources people have. And as a result, convenience has become a dominant force in how consumers make purchasing decisions. This is especially true in food. More consumers are looking for ready-to-eat meals that are quick, reliable, and high quality. They want something that fits into their schedule without sacrificing taste or consistency. And this is exactly where Mama's Creations is positioned. The company specializes in freshly prepared, ready-to-eat meals that are distributed through grocery stores and retail channels. These are not frozen dinners sitting in a freezer aisle. These are refrigerated, fresh products designed to feel closer to home-cooked meals. That distinction matters because it allows the company to sit in a premium segment of the market while still benefiting from mass distribution. Now here's where the business model starts to show its strength. Mama's Creations is not trying to build a direct-to-consumer empire. It is leveraging existing retail infrastructure. Their products are placed in grocery chains where customers are already shopping. That means they do not need to spend heavily to drive foot traffic. The traffic is already there. Their job is to convert that traffic into purchases. And they are doing that by focusing on three key areas. First is distribution expansion. The company has been aggressively increasing the number of locations where its products are available. More stores mean more visibility means more trial, and more trial leads to more repeat customers. This is a straightforward growth engine, but it is incredibly effective when executed well. Second is retailer relationships. In the food industry, shelf space is one of the most valuable assets a company can have. Retailers are selective about which products they carry because space is limited. Once a company proves that its products sell consistently, retailers are more willing to allocate additional space and even prioritize placement. This creates a compounding effect. More shelf space leads to higher sales. Higher sales strengthen the relationship. Stronger relationships lead to more opportunities for expansion. Mama's Creations is actively building this cycle. Third is product consistency and quality. In the prepared food category, repeat purchases are everything. A customer might try a product once out of curiosity, but they will only come back if the experience meets or exceeds expectations. Mama's Creations focuses heavily on delivering consistent taste, quality ingredients, and reliable packaging. This builds trust with consumers, and trust drives repeat business. Now let's move into the financial side, because this is where the growth story becomes even clearer. The company has been delivering strong revenue growth, driven primarily by increased distribution and higher demand for its products. Sales have been expanding at a pace that reflects both the strength of the category and the effectiveness of the company's strategy. But what is particularly important here is how that growth is being achieved. This is not growth fueled by excessive spending or unsustainable practices. This is operational growth. As the company scales production, it is able to improve efficiency. Larger production volumes allow for better cost management. This leads to improved margins over time. Again, this is operating leverage at work. As revenue increases, the cost per unit can decrease, allowing profitability to expand. For a company at this stage, that is a critical indicator of long-term potential. Now consider the size of the opportunity. Mama's Creations is still a relatively small company in a very large market. The prepared foods category continues to grow as consumer preferences shift toward convenience. And within that category, there is a growing demand for higher quality options. This creates a significant runway. The company does not need to dominate the entire market to deliver strong returns. It simply needs to continue expanding its footprint and capturing incremental share. That is a much more achievable goal. And because the business model is scalable, each incremental gain builds on the previous one. More distribution leads to more sales. More sales lead to stronger retailer relationships. Stronger relationships lead to more distribution. This cycle can continue for years if executed properly. Now here is the key question. Why is the market not paying more attention to this? The answer comes down to visibility. Mama's Creations does not have the same level of analyst coverage as larger companies. It is not constantly discussed in financial media. And it operates in a category that is often overlooked by growth-focused investors. But this lack of attention creates inefficiency. When fewer people are analyzing a company, there is a greater chance that its true value is not fully reflected in the stock price. This is where disciplined investors can find opportunity. By identifying businesses that are executing well but not widely recognized, you position yourself ahead of the broader market. Now, this does not mean there are no risks. The food industry can be competitive. Input costs can fluctuate. Supply chain challenges can arise. Consumer preferences can change. But the key is whether the company has the ability to adapt and continue growing. And based on its current trajectory, Mama's Creations is demonstrating that ability. It is expanding distribution, it is strengthening relationships, it is improving efficiency, and it is capturing a growing share of a market driven by long-term consumer trends. This is not a speculative story. This is a business that is building steadily, step by step, and those are often the types of companies that deliver consistent returns over time. They do not rely on hype, they rely on execution. And when execution is strong, growth tends to follow. Right now, Mama's Creations is in that phase where the foundation is being built, the growth is accelerating, and the broader market has not fully caught on. That combination is rare, and when you find it, it is worth paying attention. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. When you step back and look at both of these companies together, something important becomes very clear. They are completely different on the surface, but structurally, they are following the same playbook. They are both tapping into powerful, long-term shifts in consumer behavior. They are both scaling their operations in a way that increases efficiency over time. And most importantly, they are both still being underestimated by a large portion of the market. Luckin Coffee is leveraging technology, density, and data to build a dominant position in a rapidly growing coffee market that is still far from maturity. Its model is designed for speed, scale, and continuous optimization. As more consumers adopt coffee into their daily routines, Luckin becomes more embedded in those routines. That kind of integration is incredibly valuable, because once a company becomes part of a customer's daily habit, revenue becomes more predictable, more stable, and more resilient. At the same time, Mama's Creations is doing something equally powerful, just in a different way. It is positioning itself within the everyday consumption cycle of food, focusing on convenience, quality, and accessibility. Instead of trying to reinvent the system, it is leveraging existing retail infrastructure and optimizing its presence within it. That allows for steady, scalable growth. And because the company is still in an earlier stage, even small gains in market share can have a meaningful impact on revenue and profitability. Now here is where the real insight comes in. The market tends to focus on what is obvious: large companies, trending sectors, stories that are already widely accepted. But some of the best opportunities exist in the gap between what is happening inside a business and how that business is perceived externally. Luckin Coffee is still dealing with lingering skepticism, even as its operations continue to improve and expand. Mama's Creations is still flying under the radar, even as it builds distribution and grows revenue. In both cases, the fundamentals are moving forward while perception lags behind. That gap does not stay open forever. Eventually, performance forces recognition, and when that happens, valuations can shift quickly. This is why understanding the underlying business is so important. Because stock prices can move for many reasons in the short term, but over the long term they tend to follow earnings growth, operational strength, and market position. Both of these companies are working towards strengthening those core drivers. Now, this does not mean they will move in a straight line. There will be volatility. There will be periods where the market questions the story. There will be moments where sentiment shifts. That is normal. But for long-term investors, the focus should be on whether the business is continuing to execute. Are they growing? Are they expanding their reach? Are they improving efficiency? Are they strengthening their competitive position? If the answer to those questions remains yes, then the long-term thesis remains intact. And that is what separates short-term noise from long-term opportunity. Now I want to hear from you. When you compare these two companies, which one do you believe has the stronger long-term advantage? Is it Luckin Coffee with its massive scale potential and technology-driven model, or Mama's Creations with its steady expansion and position in a growing convenience-driven food category? Drop your thoughts in the comments and let's discuss. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.